Bitcoin is hitting record highs. It topped $6,000 for the first time over the weekend.
Digital currency Bitcoin hits a record high on Tuesday on soaring demand.
Bitcoin just hit an all-time high moments ago. $62,000 have been breached.
Bitcoin has passed the 100,000 US dollar mark for the first time.
Today, more bad news for Bitcoin after yesterday's collapse.
We're asking whether or not this currency really has any longevity, let alone.
Bitcoin crashed more than 20% over the weekend.
Envision this. When you sit back and watch your cryptocurrency portfolio grow, all of a sudden it crashes. Do you feel the dread creeping in? Everything is up for sale. What if instead of the market, we told you that the greatest risk to your investment success, it's only yourself? So, in order for you to put your emotions in check and start making rational financial decisions, we're going to explain the psychology of cryptocurrency investment in today's video. If you want to know how to trick your own brain, you should watch this video all the way to the end. The genuine devastation to your portfolio comes from emotions like dread and FOMO, fear of missing out. Your temptation to buy in increases as prices rise. You sell out of terror as they fall. Where can I find the top cryptocurrency investors? Not only are they market experts, but they've also perfected their mental game. Investing isn't in our brain's evolutionary blueprint. Survival is. As a result of its emotional response to price changes, it encourages us to make poor financial decisions. In this way, a fear of missing out and following the crowd, FOMO. We have to be frank. It's quite obvious. When the value of a coin begins to surge, it becomes the talk of the town in no time. Is something amazing about to happen? If I don't get in now, I'm going to miss out. However, this is the issue. Observing the crowds, you can't help but think, I need to get in too. Instantly, you're buying high, just before the market crashes. Such is the nature of herd thinking. The stock market experiences bubble moments for the same reason. Because they follow the herd rather than the numbers, most retail investors end up broke. The problem is that the masses aren't looking out for your interests. They're also driven by their emotions, just like you. Why we hate losing more than we love winning. The loss aversion trap. Loss aversion is the name of a psychological phenomenon. To put it another way, the sensation of losing money is far more unpleasant than the pleasure of making money. This dread has the potential to utterly derail your investment plan. People experience the anguish of a loss with twice the intensity of the delight of a gain. That is why a lot of investors sell all at once when prices fall, even when they should maintain or even increase their holdings. When your investment portfolio takes a 10% hit, your first instinct is to cash out. The problem is, acting on impulse is frequently the worst course of action. Why sell when you should buy? After all, you should only sell something you're truly invested in, right? Logic takes a backseat to the terror of defeat. Overconfidence, believing in your ability to outperform the market. Overconfidence is the next point we'll cover. When things are going your way, it's easy to think you can handle anything that comes your way. After a string of successful trades, you begin to believe you have finally figured it out. Unfortunately, no one can foretell how the market will behave. When people are overconfident, they put their money on the short term and take needless risks because they believe they know what's going to happen next. That's like going into a blackjack game with the mindset that you can count cards. That could work at first, but it won't be a long-term solution. When things go wrong in the market, you'll point fingers at everyone except yourself. What about the market? You are never to blame. A loss-making trade will never be able to save your portfolio from that kind of thinking. We've explored how your mind works against you. Now we're going to turn the table and we'll discuss mental exercises that can help you become a better investor. If you want to change your brain for the better, here are the steps. Come up with a plan for investing. Before getting into a trade, the most successful investors have a strategy. Their success is not something they let happen by chance. Establishing a framework to guide your decisions is essential before purchasing any coins. An easy place to start is by asking yourself, how much am I willing to invest? And when will I take profits? If you have a plan in place before you ever step foot in the market, you can control your emotions and make rational decisions. No matter how crazy things become, having a plan will keep you grounded. Set aside temporary distractions. These days, it's almost hard to think straight due to all the news, social media, and continual pricing updates. However, you'll simply lead yourself astray if you're preoccupied with keeping up with the latest crypto news, price charts, and X's updates. Distractions caused by temporary changes are simple to overlook. An enormous green candle appears for a split second before collapsing. The background noise needs to be ignored. Put less emphasis on the daily price updates and more on the long-term trends. Crypto is prone to sudden price swings, which can cause investors to act rashly. You may improve your decision-making for your financial future by keeping the broader view in mind. Instead of letting your emotions dictate your actions, use data. Gut feelings are not reliable. Making a buy or sale based on what you see on your phone screen could be a gut feeling, but it doesn't necessarily mean you're correct. Stick to concrete evidence instead. Research on-chain KPIs, examine project basics, and look at past trends. With these, you can make unbiased choices. Look at the data instead of following the herd on social media or the news to find out what's popular. You need to know the project's schedule. How solid is the group that's supporting it? Is it useful in the actual world? Make judgments based on these questions, not on the next trending tweet. What follows is a discussion of methods that can assist you in controlling your emotions so that you can make logical, lucrative decisions in the cryptocurrency market. Dollar cost averaging, DCA. Put your market timing skills to the test now. Doing so can only lead to disappointment. Another option is to think about dollar cost averaging. This entails putting money in at regular periods, no matter the price swings. As a result of implementing this plan, the market's volatility is mitigated. Instead of trying to time the market to purchase low and sell high, you should focus on building up your holdings gradually. You won't have to worry about missing a beat in the market when you use DCA. This method has been shown to be effective in the long run. Profit without feeling remorse. You shouldn't hold off on selling just because you're waiting for the market to reach its maximum. It is futile to try to time the peak. Make sure you have a plan to take profits instead. Establish desired prices and unload some of your holdings when the market goes up. This way, you can lock in your earnings while retaining some market exposure. You're playing it smart, not risking everything on the next big move. Project your objectives into the future as an investor. Daily fluctuations in prices can easily corner anyone. However, the reality is that you will spend an eternity following the market if you are only concerned with short-term gains. Traders with an eye towards the future will reap the most rewards from the cryptocurrency market. Step back. Consider the market's trajectory over the next 5 or 10 years. The insignificant details won't be important if your investments are in worthwhile initiatives with practical applications. Those who are willing to hold on for the long term usually end up ahead. The power of your emotions determines whether you will become wealthy or poor. Learning how your emotions influence your investment behaviors is as critical as knowing which coins to buy. For more logical, no-nonsense crypto advice, like and subscribe if you found this video helpful. Plus, share with me in the comments. Which investment emotion do you find most challenging to manage? Until the next one.